Okay, good day, guys. This is MFX here. So I'll be your host and your teacher for today. And today we'll be talking about what causes a change of trend or price retracement. What causes a change of trend or price retracement? And I believe we basically know what the trend is in FX. And I want to specifically discuss on what causes, why does price react when it gets to some certain level, when it's on downtrend, when it's downtrending, what happens to it, why does it react and start retracing, or when it's uptrending, why does it react to a certain place and start retracing? So that's basically what we are going to be talking about today. So change of trend or retracement. Remember, it's what causes change of trend or retracement. Okay. So the first thing I have here is mitigation of higher time frame supply and demand zone. Mitigation of higher time frame supply and demand zone. So we're going to head straight to the chart. Overlook what you're seeing here. It's just me taking minor trade. Okay. Um, so let's get to it. Gonna use another pair, VPUSD. So let's use this. And let's go to the weekly. Okay. I think I have something I was studying beforehand. Okay. Yep. So this is just me doing a little bit of study. So if you take a look at our slide, the first we have is mitigation of higher time frame supply or demand zone. And over here you could see that for a good amount of time, we had a ranging market. We had a ranging market or a ranging price. A ranging price is simply something that is not going up, is not creating lower lows or creating higher highs. Now, what validates a trend is your break of structure, where you could see break of structure creating higher highs or break of structure creating lower lows. This is what I mean. You can't say a trend is a trend if it doesn't do, in the case of an uptrend, if it doesn't do something like this, creating, this was a previous high, now this is a new high. This is a break of structure creating higher highs, retracement, another validating this first break of structure, second, this is what I call MB1, MB2, and up we go. Yep. So this is what validates the trend that we get to see higher highs, higher highs, higher highs, higher lows, higher highs, higher lows. Basically, oh no. So that is that. And same thing for your sales. But you could see here that this is the current range and there was no break of structure above this or below this, and price was just ranging in this particular um price was just ranging around this. Price was just ranging around this for a good amount of time. So we never saw a huge price reaction until the mitigation of this POI or what we know as supply zone. So we saw that immediately price mitigated this supply zone. There was a retracement. Okay, there was what? A retracement. And after that, higher time frame liquidity grab. This was a mitigation of liquidity. This was a mitigation of this liquidity. Price mitigated this liquidity. Now, at every swing low or swing high, what we know as weak lies liquidity. At all this has not been mitigated. There's liquidity here, liquidity, liquidity, liquidity. Okay. At every swing high or low, there is liquidity. So this was a liquidity gap that happened here. So after this, it was a bullish price. Then price mitigated this supply zone, what we all know as point of interest with the SPI, mitigated this supply zone and retraced. And we saw that price reacted again after grabbing the liquidity that we had below here, and we saw a retracement. Okay, a retracement. And after that retracement, a mitigation of another supply zone, then price react again and did what? And continue this trend, because overall wise, this is a downtrend in price. You could see that it keeps creating lower lows and lower lows and lower lows. One, two, three. You could see downtrend, lower lows, lower lows, lower lows, and all that. Okay, and all that. Yep, and all that. So what I'm trying to say here today is this, that we should take note that basically these four things are what price reacts to. Okay, mitigation of higher time frame supply or demand zone, higher time frame liquidity gap, even lower time frame liquidity gap. Sorry for this error, but mitigation of higher time supply and demand zone, or mitigation of supply and demand zone. Okay, higher time frame. Higher time frame. When I mean higher time frame, it doesn't talk about the weekly alone, but the daily is a higher time frame as compared to your 1 hour, 2 hour, 3 hours, 4 hours. The 4 hours is a higher time frame as compared to your 1 hour, 2 hours, 15 minutes, 30 minutes, and all that. So that's what we're talking about. Higher time frame. Just know the higher time frame. The reason why I'm using the word higher time frame is because there's a saying I learned from the quiz that says that lower time frame will always deliver price to the direction of the higher time frame. Lower time frame will always deliver price to the direction of the higher time frame. So the higher time frame has like a higher influence over the lower time frame. Yep. You could see that basically in this, if you go to a lower time frame like 4 hours, this should look like um a bearish move. Okay, a bearish move, but overall price was retracing, which looks more bullish, and which you could take bullish because this is basically weekly. You have a week of structure one, week of structure two. You can um take a buy here from a PI and all that and all that and all that. So that's where I'm headed to. So the next we have is double MV break of structure formation to the opposite side of the current trend. So this also changes price. Okay. Remember, we're talking about change of trend or retracement. This also creates retracement or changes trend. Now, that is what we have here. MB1, MB2, or what we all know as break of structure, BOS, first break of structure, second break of structure. Now, there is a high probability that because we've had this double break of structure, we're going to be seeing, sorry, how did I get that? Because we had this break of structure, we are going to be seeing something like this. Maybe price is going to come and test for whatever it's looking for, or whatever POI or liquidity that's below all this liquidity. This, and we're going to see something like this. Now, I'm not saying price is going to get to here, but because we have double break of structure, it's a validation for a change of trend. Okay, it's a validation for a change of trend. Now, if you zoom out, you're going to see that there is a POI around here, if I'm not mistaken. I think I did a markup on that on another um um exchange. Yep, another exchange. Let me see. GBP USD. This 1 month. Okay, yep, yep. So you can see there's a POI. There is this, and this POI. So that is basically I thought, though, doesn't matter. Yep. So double break of structure to the opposite side of the current price can also change trends. Break of structure one, break of structure two. And basically, because of this, I'm bullish to the opposite side. I'm bullish. That's that. So the next we have is absorption, which says liquidity without a candle body close of liquidity on higher time frame, higher highs or lower lows changes price direction, which causes retracement. In an uptrending price, in an uptrending price, in an uptrending price tend to mitigate POIs. Okay, forget about this, but this is the most important thing. Absorption, which is liquidity gap without a candlestick body close, also changes or retraces price. And I'm going to use my current trade to give you guys an example of what I'm talking about here. I'm going to use my current trade, which is this XAU, pardon me. This is a concept I've studied and I've used it over and over and over again. Now, overall, you could see that price is bearish on XAU. We've had double breaks lately. Break of structure, 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 break of structure. But whenever there is a liquidity gap without a body close, I was on 5 minutes time frame. This is what I mean. This is liquidity. I call this an absorption. Whenever there is an absorption without a body close, what I mean is something like this. This is a body close. This is a block of structure. I will take this as a block of structure and change of range. But whenever I see something like this, a wick, I call it a liquidity gap. Whenever there is a liquidity gap, this is the liquidity. Remember what I said earlier on, that weeks, these are liquidity. You could see liquidity. I took this trade because of there was a demand on the supply zone here or a POI, and this was also a liquidity. So it was a clean trade for me. Okay, yeah, it was it was a clean trade. Okay, so whenever there is a liquidity gap without a body close like this, price tends to do what it trace. You could see after this was the previous low of this range. This was the previous low of this range. Okay, so price came, grabbed liquidity, and failed to give us a body close. And because of this, we saw break of structure, second break of structure, what I call MB1, MB2. And what do I expect? I expect price to at least close above this high. And that's what we are seeing right here. That's what we are seeing right here. And we could see this is a live chat. Like I'm literally showing you guys what I use or what I just explained right now on a live chat. You could see liquidity grab, price retraces. It's that simple. Liquidity grab and price retraces. It's that simple. Liquidity grab and price does what? Retraces. It's that simple. Now, I think I have something like that also here. Yep. Was it? Okay, yes. On the monthly. Yeah, you could see absorption, not BUS. That's why I use this word absorption, not BS. And what happened? Price retraces. So I'm not trying to catch a falling knife. You could see that I'm taking this trade. I am. So you could see it already up 2K. Yeah. It's a pop challenge account. It's not a live account. So you could see that it's demo, but you could see that I'm taking this trade on a challenge account. So you could see this and retracement, this and retracement. So after we had this, I waited for my double MB or double break of structure confirmation on the 14 minutes, on the 15 minutes, which is this. First, then second, first book of structure, second book of structure, and I look for the POI and took that as my buy. And you can see price is already killing it. So that is that simple. So what I'm saying is basically from my study that there are four things that makes price that changes the trend or makes price to retrace. Now, in these four things, when it comes to supply or demand zone, there are also so many other things attached to supply and demand zone. Why? What do I mean? Now, in supply and demand zone, we have what we call um breaker block, which are failed supply or failed demand zone. Those also makes price to change direction and all that and all that and all that. We also have imbalances. Those are all that under, I categorize them under supply and demand zone. They also make price to change trend or retrace to the opposite direction of the current price. Yeah. So basically, overall, there are four different things based on my study that changes trend or makes price to retrace. Number one, mitigation of higher time frame supply and demand zone. Number two, higher time frame liquidity gap, which was we saw that double double break of structure formation to the opposite side of the current trend, then absorption, okay? The liquidity gap without a candlestick body close. So that is that. It is that simple. Very simple. You could see. And this is live. This just saw that some minutes ago, and you could see for you to know that this is not me trying to do what they call hindsight. Let me show you. I saved it. Yep, you can see it. Liquidity gap. Okay. Retracement. I waited for 15 minutes wake up structure in higher time frame. One, two. I saw it from the 1 minute I went to the higher time frame. Okay. Wake up structure one. So I applied two of these laws, which is number one, absorption of liquidity. Number two, double MB or break of structure formation to the opposite side of the current trend in a higher time frame. So it is that simple. It is that simple. So I believe this was an educative video. I don't know if you find it educative. Please like, share, and also comment what you think about it, what you also did understand about it. Thank you and stay tuned.